Hi, I'm Andrew Malcolm from Mortgage HQ, and today we're talking about getting a second mortgage on your property, and this is usually for a specific reason. So when people are looking for second mortgages, usually they're looking for debt consolidation, or they might be looking to get quick access to cash, and it's usually on a higher LVR percentage, which means the ratio of lending on the property that you're using as security is a bit higher than you could usually get at the bank. There's usually a strong reason why you would look at a second mortgage, and it's sometimes called a caveat loan. Now, the nuanced differences are important. So if you're looking to consolidate debts and maybe the bank is not willing to let you do what you want to do, or maybe you need to get a top up to cover a tax repayment, then what you're going to need to consider doing is getting a loan on top of your mortgage and getting a second mortgage to sit as a backup on top of that mortgage. So what it will mean is, let's say your property is worth $1 million. You got a $500,000 first mortgage at the bank. The second mortgage might be a $50,000 mortgage that sits in as a second security, so that if your property ever got sold because you missed repayments, the first mortgage would get repaid, and then the second mortgage would get paid after agents' costs and all the legal fees. So the only way you're ever going to get the caveat or second mortgage is when there's enough equity that you can use it, or enough security that mortgage lender is happy to do it. Now, a second mortgage in New Zealand anyway is most commonly with a mortgage specialist lender or a non-bank lender. It's not commonly referred to as a second mortgage when you get it done at one of the main banks. Two different banks can't put different mortgages on the same property. It just doesn't work like that. Now, a key consideration when you're working towards getting a second mortgage is it's usually higher interest rates, actually quite a bit higher, sometimes 5, 6, 10%, or even more, up to 20%. This is because the risk for the mortgage lender is usually higher. Maybe you've got bad credit, maybe your income has been hit. There's usually circumstances that are negative that the main bank is not going to allow you to have the second mortgage. So the specialist mortgage lender is only going to do this based on the risk, and they'll charge a higher interest rate. And they might with the second mortgage allow you to do capitalized interest. And so all the repayment they build up and they're paid in lump sum at a later date, or they might allow for interest only lending. So you borrow your $50,000, you just pay the interest and not the principal, and then at a certain period you've either got to refinance, or you've got to sell the property, or find another way to pay down that debt. And it's more common for second mortgages that it would be done for a shorter period of time, if your hand really gets forced, because it is quite expensive. Now, a pro tip if you are looking at second mortgages or a caveat loan, we want to do the calculations measuring. We would take the existing mortgage, say at 2.5%, do those calculations on your repayments, maybe some restructuring or refinancing needs to get done there. And then the second mortgage of only $50,000, if that interest rate, for example, is on 10%, you have $500,000 on 2.5%, $50,000 on 10%. We can show you on a spreadsheet what the repayments look like and what sort of planning you need to do. On the flip side of that, what we could also look at doing is taking the $500K and the $50K that you're looking at doing a second mortgage on, package it together, refinance, restructure that whole lending to a non-bank or even potentially bank lender, and the interest rate, instead of being 2.5% or 10%, maybe it's like a 3 or 4% loan, and we'll actually be able to show you that the repayments is easier to manage. The exit strategy is more favorable for you. You give yourself more optionality and more liquidity, and maybe actually this option gives you access to more cash rather than using that second mortgage. The common term is to think second mortgage, I need another a loan provider. Maybe the package makes more sense. And this is where spreadsheets and a mortgage advisor is going to add a lot of value. So if you're considering a second mortgage, you fill in the snapshot on the Mortgage HQ website. You can flick me an email, andrew@mhq.co.nz, and we can chat about why you're looking at second mortgages. We are going to do a bit more info on second mortgages, so don't forget to subscribe and have a look at the playlist.